Hello everyone, today is January 14th, 2023. Welcome to a channel purely focusing on chart technical analysis. Welcome to subscribe so you won't miss any of my new videos. As you all know, the cryptocurrency market was on fire this week. One of the reasons behind this is the CPI data shows that inflation is moderating. This has led the market to assume the Fed will stop raising rates as quickly as it has done for the past 6 months, and may even be forced to lower rates to prevent deflation. That's one of the news behind this. Before we go further to this, let's have a look at the disclaimer first. Let's go to the chart and cut the cheese. So this is the BTC versus USD dollar. If I remove all the drawing by click this is the pure chart. You know, there are so many interpretations of all kinds of news on YouTube. You can interpret the news any way you want, right? But there are very few interpretations of chart technical analysis. In my opinion, we small retail investors should learn more technical analysis and watch less news or rumors, because it is important to listen to what a person says, but what is more important is to see how a person actually acts, implemented in operations. No matter whether it is a large institution or a small retail investor, in the end, you have to buy and sell according to the current price, right? As long as you buy and sell by a price, then you will leave a mark on the chart. So what we have to learn is how to look at the chart and to find various traces left by large institutions or small retail investors, or whoever they are, to help us judge instead of listening to various gossips. That doesn't make any sense. Not much help for people who want to survive in the market for a long time. Therefore, let's just look at the chart right now. As you can see, this is a monthly chart on TradingView for Bitcoin versus USD dollar. As you can see down here, from 3850 to 13,880, there is a trading platform, or I call it battlefield, for the bulls and the bears. And this uptrend was up from 3,850 to 69,000, and it pulled back from 69,000 to the lowest was 15,497. What it tells us here? You see, this price 15,400 something is higher than 13,800 something. It's not into this trading platform, or it's not into this battlefield. You know, when you're trading something, when you're buying something, you want to get money. There are two ways to get money when you're trading. One is if you assume this trend, this downtrend is, or down cycle is finished, or the doom cycle is finished, then you buy this pivot point. You are expecting it go up, right? In this way, you buy low, sell high, then you make money. Or if the trend is already up, if the trend is up here, and you think it will go up more to 5,000, then you buy here. You buy high, you sell high, right? This is the second way you can make money. This is when you long stock or crypto. So these are two ways you can make money. I'm not talking about any other things, but by trading, this is only two ways: you buy low, you sell high, or you buy high, sell high. So this is a very basic theory when trading a stuff. So that is what I assume here. This downtrend, let's assume it is finished, and this is the pivot point. It will go up from here, but this is a monthly chart. Remember, this is a monthly chart, so one candlestick is 1 month. So this is a very large time frame. This is a very large time frame. So by reading the large time frame, it gives you a long period direction. Even though it's not like a smaller time frame, you got a lot of indicators or signals, but by reading the long term, a large time frames give you a better, clear reading the chart. So it's not under this key supporting level, 13,800 something. So that means it's finished up down here, it will go up. This is our first assumption. So with that assumption, we have to look a little more from 69,000 down to 15,000. I have already highlighted this part. In that way, we can see it in the lower time frame. And this is the weekly chart. In the weekly chart, you guys can see that here is also a battlefield or platform from 18,157 to 21,301. The reason why I marked this as the lower part of the box or platform or the upper level of the platform is according to the Chan-Lun theory. It's according to the Chan-Lun theory. It's the definition. They have a clear definition how to draw this is the model. This is the model in the theory. So if you want to know why, you have to read the theory. But I'm just telling you the results. So this is the trading platform, and right now the rebound from 15,400 is up into the trading platform. So let's do a military simulation. Let's do it like a military simulation. So what will happen next? Will this trend go up above 21,300? If it's go up, and if you want to buy here, you are expecting it go up more, right? In that way, you have to follow the trend to check a lower time frame if the trend or if the strength is really strong. But it's not the good thing to chase the high. Chasing high is not good. If I were you, I would like to wait the pullback. Wait for the pullback and double check this price. And it's not touched. It should not touch this 21,001. So this will be the entry point, and then I expect it will go up more. So this is the profit taking this part. So this is the entry point, not chasing the high, waiting for the pullback. This is by just reading the weekly chart. This is the 1 week chart. So you know what to look. The key resistance level, 21,300, is very close to that level. Let's see, will it stop at this level, or it will have a small pullback here and then go up or not? So by reading the 1 week chart, weekly chart, we don't get more information just with this price and this one. So what we will do is we used our amplifier, lower it to lower time frame to the day chart. So this is the day chart, as you can see it. And in the day chart, and the lowest level of this trend was from 15,479, and to the up was highest was 21,247. And in this trend, let me mark it so we know which part we are talking about here. I'm talking about this trend now. Okay, the higher price, let me mark it. Yes, you see the price tag there. So in this trend, in this part, I have also marked a trading platform from 16,293 to up to 60,783. So this level, this range is the key range we will monitor in the next weeks, next months. What we are looking for is, will it have a pullback? Let's use the Fibonacci. If we use the Fibonacci, checking the pullbacks, let's assume 21,247 is the highest in this short period, and it will pull back. We assume it will pull back, but we don't know. Will it pull back to this, the first supporting level, 19,000 something, or it will down to the second supporting level, 18,000 something, or even to the third supporting level, 18,185 or not? We don't know. I mean, we have to follow the market trend. We have to follow the big institutions or small retail investors, the sum of them, not the single ones, not the individual ones, but all of them together. So that's the market trend. So let's follow the market trend, which pullback level it will go to. So we don't know, but we have three key levels to monitor, right? This is very obvious. When it's put down here, when it pulls back to these three levels, when the pullback getting weak, then it's our opportunity to jump in. These three levels we need to monitor. When you have the Fibonacci to help you, so you don't need to guess. You just need to watch closely, be patiently, watch the market. So that's the thing we all need to learn by using the tools. Okay, but what else? We need to check if this trend from 16,293 to 21,000. Let's look the inside in the 4-hour chart. Let me mark it. I will check this one. Use this amplifier to check the 4-hour chart. What's going on in the 4-hour chart? Yes, you see, it's same thing here. We are using the same methodology from Chanlun to analyze all time frames, using one single theory to analyze all time theories. That's really wonderful. Once you master it, once you know it, it's really easy to use. I guarantee you, once you learn it, it's really easy to use. So what are we watching here? Same as the day chart, weekly chart, monthly chart. We got the trading platform, or we got the battlefield. And what we are waiting for is just check the pullbacks. Same as day chart. There are 3 pullbacks. Actually, it's the same stuff, but it's a little bit in a smaller time frame. You have 3 levels to check, to monitor. So it's helping you to make decisions. So do not chase it for this price already. It's even though it's close to 20,000 something, but waiting for it pullback to 19,500. This is the first supporting level. When it's getting weak, by checking the MACD or something other indicator you are using, it will help you make decisions by just checking these three levels. Okay, let's sum it up. So in the monthly chart, we know it didn't go into this trading platform, so this lowest didn't touch the highest level. So what we are expecting is, if by using the Fibonacci, the first target is 35,000 or 36,000. It's very close to 36,000, right? So the first target is 36,000 from here. This is the first target. This is by just reading the monthly chart. What did we read from the weekly chart? In the weekly chart, we will monitor 21,300. Will it strongly go up above this price, or it will stop around here or close to here and have a small pullback to double check the bottom? Will it have two bottoms around 16,000? We don't know, but we have to monitor the strength. Will go up really strongly from here or not. So this is not the time you jump in at the 21,000 because it's very close to the key resistance level, 21,000. So waiting for the pullback, maybe to the 19,000. That's a good time for jumping to buy or long it. In a day chart, what did we read? In the day chart, we used the Fibonacci. We used the Fibonacci to check this. We know there are three levels we need to monitor. So by monitor the supporting levels, we know when it getting soft landing, then that's our chance to get in to buy long. So if you are shorting it, then also there are three levels to monitor to cover your short positions, right? So doesn't matter you're long or short, these three key levels you have to monitor. And what did we read in 4-hour chart? Same like day chart. There are three levels. These are the same as the day chart because they are using same price. If I let me check, yes, 16,000 is down here. So this one, okay. But the thing is, the small difference is the uptrend. It started from this price. Let me check this price. The trend in the 4-hour chart is started from 16,700. So we need to use this price tag to measure the supporting levels. All right, guys, that's all for today by reading the chart, doing our technical analysis for Bitcoin versus US dollar. I hope it will help you guys make your trading decisions. Please subscribe to my channel if you like my technical analysis, and I will post more videos about the technical analysis in English. All right, thanks for watching. Bye bye.